thousands of pitches, hundreds of meetings, dozens of term sheets. But in the end, it all comes down to one thing: the ability to see what isn't there yet. Venture capital isn't just investing. It's a high-stakes bet on human potential and technological evolution. While the world looks at quarterly earnings, VCs look at the next decade. They are the kingmakers of the digital age, the silent force behind every unicorn that changed your life. But for every success story, there are 100 collapses. To be a VC is to live in the power law, where 99% of your bets fail, and the remaining 1% carries the weight of the world. Today, we decode the elite blueprint of betting on the future. If you are an entrepreneur building the future or an investor looking for the next big shift, you have found your home. Subscribe now and join the 1% who see opportunity where others see risk. Section 1. The Power Law Logic. Venture capital operates on a mathematical reality that defies common sense: the power law. In a traditional portfolio, you look for steady growth across the board. In VC, you expect most of your investments to go to zero. You aren't looking for a good return. You are looking for an outlier that returns the entire fund. This creates a unique psychological pressure. You have to be comfortable with constant failure while maintaining the conviction to write a multi-million-dollar check when everyone else is skeptical. A VC's job is to be right and non-consensus. If everyone agrees with you, the opportunity is already gone. You must find the genius in the garage before the rest of the world even knows the garage exists. Identifying a trend is easy, but identifying the person who will lead it is the true craft. While the technology matters, the founder is the heartbeat of the deal. In our next section, we explore the founder market fit, the rare DNA that separates a dreamer from a disruptor. Section 2. Founder market fit. When a VC looks at a pitch, they spend 10% of their time on the slides and 90% on the person behind them. In the early stages, the product is often a hallucination. The only thing that is real is the founder's obsession. They look for founder market fit, the perfect alignment between a person's life experience and the problem they are solving. They aren't looking for someone who wants to be rich. They are looking for someone who cannot help but build this company. They look for resilience, high AQ, adaptability quotient, and a touch of madness. A VC is essentially a professional talent scout for the world's most intense human beings. They know that in the middle of the valley of death, the founder's character is the only asset that won't depreciate. But even the best founder can fail if they are fighting the wrong tide. Timing is the silent killer of great ideas. Next, we examine the art of the pivot and how VCs help navigate the treacherous waters between a failed hypothesis and a billion-dollar breakthrough. Section 3. The art of the pivot. No great company ends up exactly where it started. Twitter was a podcasting platform. Slack was a gaming company. YouTube was a dating site. The role of a venture capitalist is to be the active partner who recognizes when the current path is a dead end. This requires a delicate balance of support and ruthlessness. You must have the courage to tell a founder that their baby needs to change, and the vision to see where the real value is hidden. A VC provides the capital to survive, but also the strategic air cover to retreat and regroup. It is a partnership forged in the fire of uncertainty, where the goal isn't just to stay alive, but to find the path to exponential scale. Scaling is the final frontier. It is the moment where a small team becomes a global empire. In our final chapter, we look at the multiplier effect, how VCs use their network, prestige, and resources to turn a spark into a sun that illuminates the entire market. Section 4. The Multiplier Effect. A check is just a piece of paper. The real value of a top-tier VC is their network. They are the ultimate connectors. They open doors to the first major customers, recruit the executive team, and provide the social proof that attracts the next round of funding. When a VC invests, they aren't just giving you money, they are giving you their reputation. This is the multiplier effect. They take a local success and provide the infrastructure for global dominance. By the time the world hears about the company, the VC has already spent years in the trenches, shaping the narrative and building the moat. They don't just predict the future, they fund it into existence. Venture capital is the ultimate game of conviction. It is the art of being comfortable with being wrong most of the time, in exchange for the chance to be spectacularly right once. The world is built by those who are crazy enough to think they can change it, and funded by those who are brave enough to believe them. The future is a blank slate. What are you betting on? Are you building the next 1% or looking to invest in it? Share your vision in the comments and type future if you're playing the long game. Like this video to help us find the next disruptors and share it with a founder who needs to hear this. The next unicorn is out there. Stay sharp.